to episode 20 of The Bottom Line. We have a special episode again this week. We're going to kick things off with Syed's tech updates. But after that, we're actually going to be talking more about cryptocurrency this weekend. We're going to start off by talking about how to earn passive income via cryptocurrency, which is something that a lot of people aren't aware of, but you can actually earn significant passive income while you are holding these coins. We also wanted to jump in on Saturday Night Live with Elon Musk. Obviously, there's a lot of attention, a lot of eyes on that, especially as it pertains to how it will affect Dogecoin's price. So we want to tune into that, see how the first few minutes or 5-10 minutes go, and see if we can get some key insights out of that. And we're going to end off this episode with stock picks, an update from last week's picks, and what our picks are for the upcoming trading week. So with that being said, the floor is yours.
Hey guys, thank you Deepak. Hope everyone is doing well. We're really excited for Saturday Night Live as Elon Musk will talk about Dogecoin. So before that, I'm quickly going to go over a few tech and security things that happened in the past week. So first, I wanted to talk about Apple and how it reported two 0-day vulnerabilities that let hackers compromise their fully patched devices. So as you guys know from last week, I mentioned that they released iOS 14.5. But then, obviously, these actors weren't done, and they found flaws in this new iOS update that basically let these attackers execute malicious code. I'll leave the article in the description below so you can read more. Not going to go into too much detail there, just because of time, because I have more things to cover here. Next up, another cyber attack happened. This one in an Alaska court system, and they were forced offline due to a cyber attack. They were basically hit with the denial of service attack. And once again, I'll leave the article in the description below so you can read more about this. Next, I wanted to mention about a ransomware called Networm that's emerging in wave of cyber attacks in Israel. So basically, what this ransomware is, it's known as Networm, and it's targeting Israeli companies in the wave of cyber attacks starting last week. And again, there's an article that goes into this, a bunch of articles on there. And unlike other ransomware gangs, right, Networm has created a data leak site where they threaten to leak stolen files as a way to scare their victims into paying a ransom. So that's something I found interesting, and I thought our viewers might as well. So yeah, check that out. Next, another denial of service attack, this time in Belgium, and basically this knocked off their government websites, and this was massive, and it basically shut down their websites, as I mentioned before. Their internal networks were also impacted, and this was like a really major news developing there. So be sure to check that out. Once again, I'll put the article in the description. Next up, we're talking about Tesla. So Tesla, a few researchers, cybersecurity researchers, they discovered a way to remotely exploit a Tesla via zero-click exploit. Basically, they use the drone, and using the drone, they can remotely control the car without any user interaction. So this is a very interesting read, and again, not going to go into too much detail there, but I'll put the article in the description, so be sure to read more. Next, I want to talk about malware as a service again, as we did mention that a few episodes back, but again, it's on the rise again, and basically the RaccoonStealer is back at it again, selling, it's being sold on the dark web, and threat actors are taking advantage of it, collecting data from individuals basically, and a bunch of data is being leaked here and being sold as ransomware due to this, due to the RaccoonStealer, and yeah, so be sure to check that out if you're interested as well. And then next up, I wanted to talk about Operation Tunnel Snake. Basically, it's a rootkit that's used to secretly control networks of regional organizations. And there's an article here that talks about it. I thought it was an interesting read, and be sure to check that out if you're interested in that. It just came out, yeah, I'll put the link in the description for that. Almost done here. I wanted to talk about a DNS bug called TSUNAME that's allowing hackers to get a denial of service attack on DNS servers worldwide. So again, denial of service is a major theme for this week, as a bunch of them have been happening everywhere. You can see that Governments are getting targeted as well, and then here DNS servers are getting targeted. So great read there. And then to end off this week's tech update, I wanted to tell our viewers about another cyber attack that happened that forced a shutdown of a top U.S. pipeline, and the operator, Colonial Pipeline, said it had halted systems for its 5,500 miles of pipeline after being hit by a ransomware attack. So again, ransomwares, DDoS are a major theme this week, and not only this week, but like overall in the security world. So it's just a major theme here, and I feel like people should be aware of it. And then to end, and then last one, I wanted to let our viewers know about a misconfigured database that exposed 200,000 fake Amazon reviewers. And this was another big one because it had to do with Amazon, and it was over 7 gigabytes of data that contained over 13 million records, including email addresses and WhatsApp and Telegram phone numbers, vendor contracts, plus email addresses, surnames, PayPal account details, and Amazon account profiles of reviewers. So yeah, check out all these articles in the description below if you're interested, and be sure to reach out if you have any questions as well. But this wraps up our tech update. Yo, what up TikTok? So Doge is taking a massive dump right now. Doge is taking a massive dump, as we'll pull up the charts right here and show you all.
I wouldn't recommend buying this dip.
Go to the moon. Doge to the moon. Look at this.
I wonder if SafeMoon and Shiba are tanking as well.
That's the
I wouldn't be totally surprised if you see a little bit of a bounce at some point. Yeah. But again, it's a very risky play here. I think looking at the chart, it actually fell to about 52.5 cents before getting eaten up again. So maybe look at that as a potential support level for it. But honestly, if it breaks that as well, it's not looking too good for Doge.
Yeah, it's not. It's not down 23% now. Right, look at the charts, y'all. This is how you don't go to the moon. It's gonna. Oh, it went up. It went up a cent. Great.
Buy the dip. No, I'm just kidding. Don't buy the dip,
guys. Just kidding.
Just kidding. Not financial advice at all.
He's a part of Wall Street Bets. Don't trust him.
It is bouncing a little bit. It's up to 55 cents now. So, it's not going to go straight down. I do expect there to be some sort of bounce at some point here.
Yeah.
Again, you don't want to be catching falling knives either. So again, unless you're an experienced trader, you would probably want to just watch this from the sidelines because it is really risky to go in right now.
Yep. This is incredible. And honestly, we call this on their previous episodes where we were like, once it hits, it's about to hit $1, or like a major like news comes out, or like Elon talks about it on a live show, it's bound to dip. And there it is, ladies and gentlemen. You just see the dip.
Yeah, it's one of those typical sell the news events where everyone thinks that, oh, Elon's going to come, it's going to pump over $1, $2, $3. And really what happens in those situations is that the exact opposite happens, right? So you're seeing that play out right now.
Yep.
Oh, man. I feel bad for the person who actually bought Doge at 70 cents right before that night. You know? Yeah. Someone bought that at 70 cents like a second before it started tanking. So I feel bad for that person.
Yeah. Let's see what the live is saying. Let's see.
The rocket technology was not good enough. And it was not getting better. In fact, it was like...
He's talking about rocket technology now. All right. Let's see where Doge is at.
valuation wasn't sustainable. It was all the way up to like Goldman Sachs type valuations in terms of market cap. Okay, like it just didn't make any sense, and you're seeing it play out. Even at 54 cents, it doesn't make sense for it to be at that level, you know? So it's just one of those things. Again, we're laughing about it, but really, like, the people that lost money, that's no joke, right? Like, that's real money that people lost on that. So again, like going into these sort of things that it's almost like a casino at this point, right? It's not real investing. So this is what we talk about in terms of risk tolerance, right, or risk appetite, doing your own due diligence.
Yep.
Making sure you're not betting, especially in these situations, that you're not betting more than you're willing to lose, right? So if you have a significant amount of your net worth in Dogecoin and you see something like this happen, again, that's very unfortunate, right? So again, if you did want to play this, I'm hopeful that you only used a small portion of your total investment account.
Yeah, absolutely. Yep. And it's down to 53 cents again. So, but here's the question for you, and perhaps the viewers on our live stream and the viewers that view this clip afterwards. Do you see this going back to $1? Because we saw a dip before too in Dogecoin. I remember when it went up to like 40 cents and then went back down again, and now we see another massive dip. What does the future hold for Doge?
I don't think a $1 price is realistic for Dogecoin, but again, if you do think that it has the potential to go to $1, then this is really the point where you should be taking a small position in after it's down 25%, right? Like you shouldn't take positions in something like this at like 75, 80 cents. I'm talking Canadian dollars here because we're here in Canada, but like, if you're going to buy something risky, you don't want to buy it when it's near the top, right? You want to buy it near the bottom. So if you do think it goes past $1 and you're bullish on Doge for whatever reason, then this is the time you might want to start initiating a position, right? And I think now, look, it's getting eaten up, right? It's at 56 cents again. So it almost hit the previous support level where when it did tank, it got eaten up. Again, that level was around 52 cents. So yep. It did come close to that. It's looking like it's getting eaten up again. So it's at 56 cents. We'll see if it makes a higher low or a higher high. That's going to depend. That's really what's going to indicate to me where this is headed, right? So I wanted before I can say that it's going to go higher, like I need it to come back to over 60 cents first, right? And if it does that, then maybe we can start talking. But it's completely dropped out of that channel that it was in. Yep. So yeah, no, it's too difficult to tell where it's going to end up right now. We'll have to keep an eye on it.
Absolutely, yeah, and this is the thing with meme coins, right, and meme stocks too. They have no logic behind it. It's just hyped, right? So as we always say here, you're on this podcast, you're on our channel, and you're on TikTok. Always do your due diligence, know your risk tolerance. Don't invest blindly. Don't follow the hype train. If you believe in something, truly invest into it, right? And hold strong. And that's what I think is critical for crypto. And yeah, pretty much don't invest into anything blindly. And that's that even goes with like stuff like SafeMoon or Elon Gate and all those tokens as well, right? So just a little food for thought there. We will end this live soon, but we'll have more coming your way regarding this SNL and more crypto stuff. Be sure to check out weekly episode 20 on our YouTube, and we are gonna end this live right here. So yeah, once again, thank you for tuning in. This was our first live ever here on TikTok. We appreciate all of you. If you want to learn about crypto, cybersecurity, the stock market, finance, investing, education, anything, like we're here to educate you. So be sure to check us out on YouTube. Our Instagram is in our bio. Our YouTube's in our bio. Check that out. We have weekly episodes to educate you guys. And yeah, once again, thank you. And we're gonna end this live, and we'll see you guys shortly. So our stock picks from last week. So I had PayPal as my stock pick from last week, and just looking at the 5-day chart, as you can see on your screen. So it did take a beating, to be frank with everybody, as you can see that on Thursday it had a low of $245, and at the start of the week it was at 265. Again, the major catalyst this week was the earnings that we did tell you guys about, and that came out on Wednesday, right? But it reacted pretty poorly, I would say, to the earnings report coming out. But with that being said, PayPal is a long-term hold for me, and I see the stock going up in the long term and giving me profit. So I'm not really panicking. But for short-term holders, yes, this was a wake-up call, I guess, for you to maybe sell off, or maybe not have a bigger position as you may have thought you could have with PayPal. But yeah, that's PayPal from last week. But keep an eye on this regardless. It could still go up. And Deepak, I'm going to throw it over to you now.
So I actually had two picks last week, one of which was DRV, which is the real estate bear stock, so 3x levered. On Friday, it actually dropped 4% from 642 to about 617 as it's closed. But for the week, it actually did fairly well. Opened the week at about $6 a share, ended off again like 617. So it's up about almost 3% for the week. But at one point, it was up 10% this week. So clearly, I think the real estate market is starting to turn. I think sentiment is shifting. So definitely keep an eye out for that one. I think there's a lot of volatility that's headed our way. The other one that I actually mentioned last week was Roku, which unfortunately, along with the market weakness in these hyper growth stocks that we've seen, it opened the week at around 346 a share, fell all the way down to about 276. So quite a steep decline there, about 20% really, before the earnings actually saved it, and they rocketed up about 11.5%. On Friday. So it did close around 317, down overall about 8.5%. So again, this is one of those long-term holds once again, and I wouldn't be too worried about the short-term volatility, but obviously the hyper growth sector has been taking quite a beating. So definitely keep an eye out and carefully tread waters here, because you never know when the market weakness is going to end. So that was last week. I also wanted to just briefly mention my stock pick for this week. Again, because the market is very volatile, I want to keep my picks very, very slim pickings, really. I want to provide for our viewers. So I'm going to stick to one this week, and that's Penn National Gaming. So Penn National Gaming actually had a 52-week high. I think it was almost $140 per share at its peak, and it did fall. Now, it fell almost to below 80. It finished the week at around 87. So it's down about 31% overall from its high. Again, this could go down further. There's no telling where it's going to end with these kind of stocks. But again, I do believe in the future of sports betting and gaming. And so I think Penn National Gaming is a great ticker, especially to hold for the long term. So that's my stock pick for this week. But not only this week, for the next weeks, months, and even years, if you're passionate or if you're bullish on the sector overall.
All right, so my stocks for this coming week are, I have two. So I wanted to talk about Juniper Networks. It's ticker GNPR, and it's basically a networking company. Obviously, we've all heard of Cisco, and basically Juniper ranks third in the global router market and fifth in the switch market, according to several reports. So essentially, it's an underdog, right? And being an underdog in two commoditized markets seemingly makes Juniper an unappealing investment, right? Because Cisco is the way to go, right? It's like the Roku and Fubo comparison we made a few episodes back, where I chose Roku and Deepak chose Fubo, right? Basically, you try to go for the competitor, and yeah. So this is why, like, I mean, those are two different. These are two different sectors we're talking about, right? So this is tech, networking, and now is obviously streaming streaming and TV, right? But I feel like Juniper's cloud-oriented business has grown over the past 2 years, and it's going to continue to grow. And it expects that momentum to continue as more cloud providers upgrade their networks, right? Its total revenue stayed flat though at 4.45 billion in fiscal 2020, but it grew 8% year over year in the first quarter of 2021 as cyclical demand for its networking hardware and services accelerated again. So again, this is why I have this on my watch list, not only for this coming week, but the future as well, as I feel like they can rival Cisco really well. Next up, this is a very common one that, and Deepak, I believe, mentioned this last week, but it's Alphabet. So basically Google's, the parent company of Google, right? They suffered a brief slowdown in ad sales during the pandemic last year, yet it offset that slowdown with the growth of Google Cloud. And again, this is why Amazon's soaring too, because of AWS. And we all know that cloud is the future, right? And then Microsoft has its cloud platform with Azure, and then we have Google with their own with Google Cloud. And basically, if advertising doesn't work for you, if you have cloud going for you, that's the way to go, right? So basically, this is why the Google Cloud is really good, and that's why Wall Street expects Alphabet's revenue and earnings to increase another 30% and 51% respectively this year as its ad and cloud business continue to expand in the post-pandemic world. And obviously, we talked about this last episode. Everybody's been talking about this. The new norm, right? Everybody's going to be still working from home. Like, it's not going to be like fully back to normal. And cloud's still going to be a huge fundamental aspect of hosting stuff, right? Online and stuff. So that's why I think like Alphabet and Google is a company to keep on your watch list for the foreseeable future. As long as cloud is relevant, Google is going to be in the conversation. So keep Alphabet on your watch list.
The last segment of episode 20, we actually wanted to talk about the 4 main ways that you can earn passive income on your cryptocurrencies. So the first one is actually centralized lending. So these are basically lending services that offer deposits and loans on a centralized platform. And those who deposit their crypto earn interest on those funds, similar to banks, right? So it's probably similar, again, how it works at a bank account. They'll hold their crypto and lend it out to other parties to generate interest. And then the interest is then paid to you on your account, actually on a daily basis. The main difference, actually, compared to a bank, though, is that these crypto loans are heavily collateralized. And what that means is that the amount of funds that borrowers can loan is always less than the value of the crypto. So then, like, you know how, I don't want to get too much into the details, but the whole concept of a bank run, that won't happen if there's heavy collateralization on these loans, meaning that they can actually lend more than the value of the crypto. In addition, unlike term deposits in bank accounts, you don't have to tie your crypto up for a certain period of time. With most lending platforms, you actually have access to your funds at any time, so it's not like it's locked in or anything like that. Is actually DeFi lending. So instead of a centralized lending platform matching lenders and borrowers, you actually have a set of smart contracts, and these smart contracts adapt interest rates based on the laws of supply and demand. What's important to understand about DeFi is the fact that you are actually in full control of your keys at all times, and there are no platforms which restrict you from earning interest and no KYC, so know your client. So actually, when you do this on a centralized system, you actually have to have what's known as a KYC, know your client. In DeFi, you actually don't need to do that. All you need is a Web 3.0 wallet that can connect to these lending apps, and you can start earning interest. And these lending contracts accrue interest continuously, which means that the impact of compounding is likely to be considerable over a long period of time. The third one I wanted to talk about is actually liquidity mining, which is the practice of supplying liquidity to a protocol which is then used in order to facilitate the decentralized exchange of different assets. So basically, you can supply USDC and ETH to USDC ETH pool, and you will then get what is termed a liquidity provider, or LP token. And these tokens actually represent your share in the pool, and you actually earn fees on that. So the fees actually vary based on the amount of total trading volume that is going through these pools, but effectively, the more trading there is, the higher fees you earn. The last one I wanted to talk about is staking crypto, which is likely the most complicated one, so we won't get too much in detail there. But basically, you're staking your coins in order to help maintain the decentralized consensus essential for blockchains to actually function. And the main benefit of staking is that not only are you helping to take part in securing the entire network, you're also earning decent returns in kind of the coin or token you're most bullish on. So obviously there's different rates for the different types of coins. I think Polkadot actually earns a higher rate of return than something like Cardano would. So that's something to definitely take a look at and keep your eyes on. But really, these are really the four main ways. Some are more complicated than others. I think if you want to go for something that's the most similar to what you're familiar with the banking system, then centralized lending would probably be the way to go. But again, there's more options out there, and I'm sure there will be more ways to earn passive income as there's more mass adoption of crypto, inevitably.
Yeah, I wanted to add on to this. So I know the third one that you mentioned, that's a really good one. Say if you have like a computer that's like really powerful and it has a high GPU, CPU, whatever, right? And you don't want to necessarily mine crypto, but like you want to perhaps earn passive income, right? What you can do essentially in a nutshell, and Deepak mentioned this already, but I'm just going to put it in simpler terms. You can essentially just like loan a part of your like RAM or GPU to these crypto miners, and they'll use it, and then basically whatever they use and however much crypto they mine, you'll get the fees back basically of however much they mine. And that's a great way to earn passive income without really mining the coin yourself. Someone else is using your resources to mine for themselves, and then whatever the price of Bitcoin is, it keeps fluctuating, right? They'll pay you a fee for using your resources. Essentially, that's what it is. And then another one I wanted to talk about, which we already did, but at a very high level, is crypto mining, and that's another way.
We have been streaming the SNL with Elon Musk, and he actually just coined himself the Doge Father on SNL. But meanwhile, as he's coined himself the Doge Father, we've actually seen Doge fall below 50 cents USD now, down 31%. And Robinhood has done it again, and they've stopped you from buying or selling. Initially, they were letting you sell when GameStop was being squeezed. Now you can't buy or sell Dogecoin. And who knows when they're going to let you do that, probably when it's below 10 cents again. So definitely, this is another one of those things where, hey, when you invest in something risky, you have to be willing to lose it all. And we've been warning you about this for the last little while. Unfortunately, it's come to fruition. And again, just if you bought this at the top, make sure you use this as a learning experience. That's all we can say, I guess.
So this wraps up weekly episode 20. We did a few things different this week as we wanted to show you guys our reactions to SNL and Elon Musk. And as a result, we witnessed live Dogecoin dropping, and then Robinhood banning the buy or sell of Dogecoin. So right now, Dogecoin's actually hovering around 50 cents. It's down nearly 30% now. So it's incredible. But yeah, we also talked about ways to generate passive income off crypto. And yeah, we hope, as always, that you enjoyed the content in this episode. And we did go live on our TikTok as well. And we're going to continue doing this in the future for sure, because we got a lot of engagement on TikTok as well while we were streaming. But as always, if you enjoyed the content, be sure to like and subscribe on YouTube, and be sure to follow us on our social medias for more great content and updates. With that being said, I myself, Syed, and my co-host Deepak would like to say thank you to you for watching and streaming, and we will catch you guys next week for weekly episode 21. Thank you, everybody.